Welcome to Grid. What's going on, Robbie?
What's up? What's up?
What's going on? So, I've been running a realtor town myself today.
Oh, which one?
Oh no,
Yeah,
no.
well.
I mean that sincerely. I got here. Cory was here very early. I got here at like 5:15. So which is usually. So thank God Cory was here and he's organized to do everything. If you didn't catch our video promoting this, we're talking about the value partnerships. So, welcome to Grid Knoxville. This is our October session, How to Be the Bank, How to Build Wealth Through Private Lending. And I am joined by the one and only Cory King. Cory, if you want to bump us through, let's talk about who we are.
Yeah, let's do it real quick. So my name's Cory King. I'm an agent. I'm an investor here in Knoxville, Tennessee market. Been doing this now for a couple of years. Really looking to, I guess, grow and just foster a community of like-minded individuals, right? So that everybody just kind of learns and grows together. That's part of really why we're putting this on, is just to kind of build and foster that community and that network of people. Hey, how's it going? Yeah, come on.
Yeah,
come on, grab a
so
seat.
plenty of room.
Sure.
We're informal here. We're all friends. Fantastic. So, hey Elena.
Hi, Elena.
Good. I'm doing fantastic. Come join us. Grab a seat. Grab a table. If you're just walked in, there is food and drinks and beverages. Grab them, please, so we don't take them home at our age. Cory and I don't need to be
I don't need to eat
eating half a
pizza.
pizza.
Yeah, for real.
It's not good for anybody. My name is Justin Myers. I'm one of the leaders of Great Knoxville. I actually met Cory here in this office. I was director of operations for a team, and Cory came and joined our team. We built this thing together. So Cory is too modest to tell you, he is our avatar, right? Somebody who got into real estate, had another career, worked his way up, right? And started investing every step along the way, from just house hacking to working through some partnerships to turning your primary into a rental and then moving on up, right? Which is something we can all do. And that's what we're trying to model for everyone here today. So today, I'm really excited because we're going to talk about a topic that's a little farther down the ladder. I started in 2005 as a mortgage broker, and then the market blew up in Tampa. And so I got to go on an interesting journey working in almost every facet of real estate behind the scenes, from property management to commercial property management to starting my own transaction coordination business. Even had a sign spinning business once. So I've learned a lot along the way. Why I'm here, I'm passionate about home ownership. And I'm passionate about the ability to create wealth through real estate. I think it's one of the few meritocracies left. It's totally wide open. We want to open this to you because everything is slanted in your favor when you get into real estate investing. You have the same advantages that a lot of the big boys do, and it's heavily tax incentivized. And we want to make sure that everyone realizes that, especially our agents, because right, it took a long time for me to realize, wait, I am building wealth for other people, and I could be doing this for myself. And really transforming it.
My first year in the business, I learned that I was running around, hustling, diving under, crawl spaces and all that, like looking over deals, chasing pennies, while the guys that are investing in this stuff are making tons of cash out of it. So learned how to do that, just that kind of income flip, taking that active income, converting it over into passive income.
Yep.
Just
So
keep it going.
Our goal today, what we want to accomplish with you is, one, we want to create an environment where some deals happen in the room, where you meet some amazing people. Everyone in here is someone I consider a friend, right? And we're fostering some deals. The other thing we want to do is kind of walk you on that education where people are taking action. So Rob just shared that he took some action after going to our Airbnb class, and he's rolling that. So you can connect with us at gridknoxville.com. You can find us on our social links, but that's the best way to link up with us, to get on the email list, to join the community. So
Yeah, that's a good one.
yes.
Take a minute to kind of go around the room, everybody kind of introduce yourselves a little bit, right? Tell us a bit about yourself, what you're looking for.
Yep, who you are, what you're looking for, and what you want to get out of today. We'll start with you.
My name is Cesar. I am looking to master my BRR strategy. I'm looking to build my 4 core team, like a good agent, a good property manager, contractor, and lender.
Yeah, for sure.
Yeah.
Excellent. Good, we got some sources for you. Elena, who are you?
I'm Elena, I work for Keller Williams. Already I like Keller Williams because I want to be mostly investing in real estate. Already have few properties and I want to continuously increase in that way.
Good, we're glad you're here.
I'm Krista Bentley. I'm with Keller Williams and Connie McNamara's group. I came as a first time for Grid. Wanted to see what it's all about and try to get some stepping stones going forward.
I love it. Robbie.
I'm Robbie Baker. I'm a local real estate agent as well. I'm here to just meet other real estate professionals, learn as much as I possibly can, develop some relationships, hopefully do some deals.
My name is Cody. I'm a title attorney at Professional Title and Vehicle. So I guess it's twofold that I'm here. I'm here on behalf of Professional Title and then for myself. We actually just got our LLC up and running, so hoping to add some properties under the LLC. But yeah, that's the main thing, just kind of, making my way in, figuring out how to invest in real estate.
So if you haven't talked to Cody, get his contact information. They're an invaluable resource. They're a pretty unique title company in that they can do some things I haven't seen anyone else do in terms of actually being able to fully e-notarize closings, which is pretty invaluable if you're working with investing or working people around town. They also have attorneys on staff, such as Cody. Tara, the owner, is also an attorney, so great resource in your pocket to get some consultation when you're running into an unusual. Right? Have that relationship with your title company that has an attorney on staff is going to save you a lot of time and money. So I'm glad you're here today. I appreciate you. Well,
Will Morris, I own a private equity firm, and I'm looking for investors that want to use their IRA to invest in real estate and businesses.
glad you're here. Well, Rodney.
Hey, I'm Rodney Johnson. Started with Keller Williams in May, and I am here to learn even more about investing because I'm ready.
That's you, sir.
I'm Rob Howard. I'm a Cory and Justin fan, hoping to get autographs. Realtor, team owner, and investor. Just looking to meet folks and enjoy the everything that always gets out of grid.
We had a guy come here, Mike Zenicola was here last month. Mike Z runs a team that's the biggest team in Ohio. And he was an attorney for 17 years before he ran this team. They do 1,500 transactions a year. He came and donated $10,000 to our local Knox Pride, just to really, as on behalf of an organization he helped found. Just a really incredible guy. And what he said is the agent that wins, the most successful agent is the nicest and most prepared agent. And Rob is maybe the nicest agent in Knoxville. So we're glad you're here, Rob.
Thanks.
That's one of your superpowers, bud.
For
Steve,
sure.
what's going on, sir?
How you doing? Steve Levine. I am a private and hard money lender. Also, as of probably the last 4 to 6 months, an extremely aggressive investor in the single family market. I'm always looking to get whatever there is to get.
Is that true?
At the
I
right
was just gonna
price.
comment, but I won't. I'm trying to behave.
Introduce yourself. This is Steve's better half.
Much
Yeah,
better.
Much better. My name's Tamara Levine. I'm probably the only agent here not with Keller Williams. And I work with Steve in LTR funding, and that's about it.
That's fantastic as well. We're just doing intros. You showed up right on time.
We love all.
Just tell us a little bit about who you are and what you're looking to get out of today.
David Faulkner, real estate investor for the last 20 years, looking to transition some assets to Knoxville, Unitown.
Fantastic. We're glad you're here. Vinny, tell the folks who you are and what you're looking for.
Vinny Sprague, wholesale, a realtor, a couple rental properties, long-term, short-term. Just finished up our first flip down here. Got 2 properties under contract in East Knoxville, so we're currently gonna be looking for buyers in East Knoxville, if anybody's interested.
Yeah. That's what we're talking about.
I'm always interested in East Knoxville. Yeah.
Yeah,
Send them your way.
Okay.
we'll probably get together on that one.
And then on the Zoom, we got our great stalwart Dawn is not with us here in person today. She's on, and Erica Ricketts. Erica works for a team that I've done a lot of business with. I do a lot of business with KWYP. It's a mortgage lending team that lends all over the country. So you got some that specializes in investors and can go. What they're really good for is if you get to that point where you already have 10 properties, you can't go conforming anymore. They have some options for you to get from that 11 to 20. So that's another good resource.
It's a good option to scale.
Yep.
Yeah.
Disclaimer time?
Yeah, a little legal.
All right. Anybody want to do the Memorex? Who's got an auctioneer voice? I bet you could do it well. Okay. So, what does this say? The state of Tennessee wants it to make it very clear that we are just real estate agents, right? I am just a sales professional. I'm an expert on our local market, I'm an expert on how to negotiate property, and that's about it. Not a home inspector, not a tax attorney. I am not any sort of attorney.
Inspector, yeah.
Right. So take this information with a grain of salt. Run it by your board of directors. That's another one there. And if you don't have a board of directors, that's a conversation we should have out offline of who's kind of reviewing this stuff and who's vetting it for you.
Yeah.
Can you
Right.
I send it back.
So invest at your own risk. You know, look who you're taking advice from. That's why we got experts here today.
Yeah, right.
All right.
Yeah, so diving into it, right, is just,
Corey,
yeah.
did you know that you can lend money to other investors?
No way.
You heard that?
Hadn't heard it before.
Just like a bank.
Just like a bank?
You can just give people money and they can give you money back.
What's the catch? Right?
As long as it's, how do you underwrite the deal?
Right.
That's the
How
real
do
catch.
you really underwrite the deal? And so really what we're talking about today is just, you know, what's called kind of private money, private lending, or hard money lending. You know, when we're looking at this, these are gonna be, you're lending on assets that are from a commercial basis. So you're not lending money to somebody that they're using this as their primary residence, you know, overall.
Yeah, that's the biggest caveat. When you get into doing, if you're lending money for a residential, like a primary purchase, there are lots of regulations around that to protect homeowners, as they should be. When you're lending money on an investment purpose, right, it is a lot caveat emptor, right? Like, it's the market's gonna sort this thing out. So that lending can be used on commercial, it can be used on residential, it can be used, you know, as an investment.
It's just looked at as like a commercial loan.
Yes.
Ultimately, right? It's not something that somebody's using as their primary residence. It's something that might rent out, flip, things like that, but these aren't gonna be money that's lent out in any kind of residential fashion.
Cody, if I say anything egregiously, you just give me the high sign, okay?
Yeah.
Yeah, because what you're essentially doing, it's a private transaction, just what you're securitizing the loan with happens to be real estate, right? You're not giving them a mortgage. This is just a private agreement where the asset's backed by real estate.
Yep. So just that, right, property in question must be purchased and held for investment properties, no owner occupants. You're compliant certainly with all of the RESPA, Dodd-Frank, Mortgage Act of 2000, Licensing Act 2008. So just always talk to your attorney or have an attorney on staff or retainer that's gonna be able to explain all this to you and ultimately draw up these agreements.
Yeah. Is anybody in business before 2008? Anybody active in the real estate investing space?
Not heavily.
No.
Rob wasn't.
So I was a mortgage broker in 2005. I was gonna give you a quick snapshot I think is relevant there. When you were a mortgage broker then, it has changed then, you could work underneath the license of the lending institution. So I came in, I got my license in 2005. Out of 200 brokers, only 6 of us had licenses. And that includes like the 6 managers and the GM and stuff in the entire building. Which can tell you a little bit about like why we went down the path we went, is you had a bunch of unlicensed individuals operating in a space where there was no checks, right, directly talking to appraisers, and then we had Wall Street, like lending institutions, account executives, coming to us and actively encouraging fraud. Because they wanted to feed their pipeline, because they were creating collateralized debt obligations and mortgage-backed securities off of there. They had a voracious appetite for this stuff. So the market's been heavily regulated, a ton of things have changed since then, but it very much was the Wild West. And I think, I like to always mention this, a significant portion of those foreclosures were investors, just like people sitting in this room, that had A-rated credit, that purchased multiple properties and made a rational decision to walk away from those properties. They weren't like suckers that got sold, right? And when I say significant percentage, I think the stats were something crazy. It was double digits. It's like around 20% of all the foreclosures were A-rated investors that just walked away. So just kind of an interesting framing device as we go into another market shift of the stories we tell.
Yeah, just don't get over your skis. Don't get like over leveraged on anything. Right?
Yes.
Don't over borrow something that you're not gonna be able to really realistically kind of pay back.
I wanted to ask you about this last one here.
Yeah.
Always consult an attorney for the proper documentation and process for making the loan. Who's done a private money deal in here? Who's lent money to someone else? You guys got a couple people in here. Yeah. How did you just call a real estate attorney to get those contracts vetted? Like, what did you do? What was the process?
So it's funny that you say that. So when we've been lending for a long, long time, but we did it in small dosages. It wasn't a high volume game. about a year and a half ago or so, I really decided like, this is what I wanna do, I'm in love with it. I called around different attorneys locally to here, cause I wanted somebody that was gonna be well set up here and that understood what I do. Because not every real estate attorney even has a clue. They have a clue, but they're not gonna do it properly. I needed the right guy, and I was fortunate. The one attorney who actually returned my call, cause I left messages, happened to have been the right guy. And I don't do any of my transactions without him. Like whenever I do a loan, even though I have the documents and obviously I could not be lazy or I could fill them out myself, every time I lend my money, he does the work for me, and whoever I lend to pays his fee for doing it. And I just think it's the smartest way to do everything for everybody involved, because there are quite a number of ways you can get yourself in trouble lending.
So it's almost like your version of buying yourself title insurance, right?
Well,
Like
and
I buy about the attorney on the front end.
and I have
big
that,
end.
and that always exists too.
Yeah, got it. No, fantastic.
Yeah, that's a big one. Just going into there. So things just to consider when you're getting into this is having some experience doing it, at least in some capacity around investing in real estate, understanding like how to estimate your repairs, how to underwrite the deals, knowing how like these numbers are gonna make sense ultimately before you just kind of start shelling out cash. You know, is having gone through either some of the past, meetups where we've kind of talked about all those little steps along the way of saying how to find it, how to underwrite the deal, what is wholesaling like, what are these numbers really gonna be to make sense?
Yeah, or, I think another way to do this, right, is you have to understand the business, markets, and process of real estate investing to become a lender, because I think we might have some lenders in the room that haven't wholesale. They didn't start off like flipping deals. They weren't doing renovations, they just came with a very strong background on that business side and marketing side. But certainly, better if you can do both. Did you know you can lend money from your IRA?
That's gonna be like out of a different prospect. I mean, that's gonna be out of what's called like a self-directed IRA, which is a whole different can of worms and a whole different, kind of grid meetup that we can gotta go deep down.
It's
really.
a totally different one. I know it's something that Will's excited to talk about. You mentioned there with Steve, and we can just touch on lightly.
Yeah.
But yeah, we have a whole section we're gonna go into on how to buy properties with a self-directed IRA. And we can get deep on, I think, it'd be a good way to get deep on some tax strategies in that one too.
It would, yeah. I think we're gonna open that up here like towards the end of the year. We'll probably bring that one back in there.
What do you need to know, Cory?
Yeah, some things to know, right? Is just understanding how to look at what are the numbers really gonna look like. What's the ARV?
Cory, what's an ARV?
Your after repair value.
How
Right? So
does-
what is this property gonna be worth when it's actually done, the rehab's completed? What is the market doing right now? What's this property really gonna be worth when we're done with
Yeah,
it?
that's complicated. If someone wanted to figure that out, where do you recommend they go, Cory?
Just go to your favorite real estate agent that's gonna be able to help you at least run some comparables in the area.
Yep.
Help you better understand the market, where things are at, maybe probably where they're headed, so that we can kind of underwrite these in advance, kind of in preparation for 3 months, 6 months down the line for kind of when you're done with that renovation project, because the market can certainly swing inside of 3 months. I think we've just seen that right here in the last 3-4 months. Our market's totally changed. Lending's changed, everything, all the numbers are different. We've actually starting to see, I was kind of running some numbers here on the 1st. It's one of my favorite days of the month because we get fresh real estate stats. So I've actually gotten to see that this is the first month over month that I've seen from, I guess this is September closed data that showed we actually had the first decrease in median sale price for Knox County. It was actually about 2.6%.
When's the last time that happened? It's years.
Long time.
Since we've seen that.
Long time, probably 2012.
The guy in
2013.
charge said irrational exuberance.
No, I mean,
About how
we've
long?
been in the longest sustained sellers market in history. It's the longest economic expansion in US history. Certainly in Knoxville, we've been in a record sellers market for at least 4 years. We've been setting records, and we've been in a sellers market before that.
Yeah.
You're not wrong.
It's about what we
It's
kind of
at least
figured though, that
2015.
we'll start seeing that happen. It's been, 6 years or so since it's really been there, but this is the first time that I at least noticed in just that median sale price actually decreased, just in that month span just across the county. So
Sure.
I think it'll be just here not for too long, right, where you'll start to see some headlines start to grab that and kind of run with it.
Here's what they're selling. I was on a call today with the team out in Vegas, right, which is one of the canaries in the coal mine for the real estate market.
Mhm.
They go up the first, and they tend to blow up first. And just looking at what's happening in the stock market, they're telling them it's going to take 6 to 9 months for the stock market to all shake out and hit some sort of bottom. At least that's what they think on the institutional investing side. and then we'll be dealing with the consequences after that for at least another year, 2 years. So that's the process there. For all this stuff, if you want more information, we have a how to estimate renovations, an entire hour-long training. It's uploaded to YouTube. You can find it there. So, how to properly renovate and add value, minimize risk, and how to estimate rehab costs. Right? Any thoughts? If you want to renovate and add value, what are the biggest places you should be looking really? Touching that really quickly.
Real quickly, like your kitchens, your bathrooms are usually like some of your bigger like kind of sale pieces overall.
Yeah.
Landscaping from a cost perspective is actually one of the best like returns on investment you can do.
You get almost 100%
Yeah,
ROI on
yeah.
landscaping. It blows everything away. What do you guys like to do? What's your big value adds?
And square feet?
Hmm?
Add square feet?
Add square
Add
footage.
square footage,
Yeah,
sure.
we're doing a renovation right now, and we just added a spiral staircase, and we're gonna add 500 feet in the 3rd floor, and then we're creating a sunroom. So we've added about 600 square feet in this place.
Just removing trash,
Trashing it out.
trash out and paint.
Yeah.
Yeah.
Those are the big ones. There's some really good data if you're a high C. I still have to find this. I've seen renovation data where they go in and they correlate this by market, and it's released and oriented towards like renovation professionals of like, hey, what's your highest ROI, and this is roughly what the percentage is, which was really cool to see. How to pull and review a credit report.
That's a big one.
Yeah. What do you guys use to pull credit? What do you like to use?
I don't generally pull it. I've had to pull it with some of the lenders I work with.
Yeah.
I don't even remember what service I use.
Yep.
I have something. It's annoying, and I don't actually, on my side of the business, this is going to sound crazy. I don't believe in pulling credit. I really don't care what your credit is, because it's an asset-based loan. If you're not going to pay, especially if you're lending in a state like this, I'm going to have your property, or your property is going to be up for auction. So you need to be responsible. I don't have that same responsibility that the bank has, to wipe your ass.
Right.
Sure.
I mean, it's the truth.
That's true.
Yeah.
And again, I still try to have the right conversation with people and make sure that they're set up to do what they're supposed to do. But to me, somebody's credit's not going to be the deciding factor as to whether they're going to be responsible or want to have a successful outcome.
Yeah.
Mm-hmm.
It's usually the benefits of using like.
That's
private
the
partner in
benefits of
there.
having a lot of experience.
But for you guys, is there a mortgage insurance that you could get to kind of back you up just in case, God forbid, they do default?
In our world?
Yeah.
No, but we don't see, banks claim that they're smarter now. I think we're in worse danger than we were in as far as the way banks run their business.
Yeah.
Because a bank will turn around to an investor and tell them, well, you have a lot of experience doing what you do, you better put down 20%. And when we do a refi out on you, we're gonna give you 70 or 75% of the appraised value. But here, Mr. Guy that just got a job 2 years ago making $52,000 a year, here's a $400,000 house with 3.5% down. So I don't need insurance. If people in our business, when they buy, they generally buy at a discount to market to begin with. And I'll always help people analyze that.
Sure.
So if they're buying at a discount to market already, and they're putting down 20%. In my world, they put down 20%, or if not, we're partners. If I'm putting down everything, we're partners on the property.
Right.
So they're putting down 20%, they're buying under market. I feel about as safe as I need to be, and I think that's generally the way that industry operates.
Okay.
The next one, we're gonna start adding some numbers.
A little faster.
Yeah.
Oh,
So what's this process look like?
What does this process look like if you're gonna do a real estate investment, right? So, real generally, your buyer's gonna sign a commercial promissory note, right? What does that note need to define, right? A promissory note needs to define the terms of the loan, so what the amount is, what the interest you're gonna charge on that, what does the repayment look like, right? What happens in default, and how are you guaranteeing this loan? Those are the general terms. And again, highly recommend use an attorney.
Use your attorney.
For an agreement,
To
right.
kind of like draw that up, yeah, because that's a commercial loan agreement
Mhm.
that we're gonna use to actually buy and sort of renovate this project. Yes, how we start.
So they're gonna sign this agreement. What is that agreement gonna say? It's they're pledging that they're using this collateral to buy this property. This is really important because those mortgage regulations we just talked about, right? They're buying this property as a commercial investment property, right? So you wanna have that in writing, that's gonna protect you as well, as the commercial loan agreement says. And then they're gonna sign a deed of trust. What does that deed of trust do, Cory?
Deed of trust is gonna put, say, me, if I'm borrowing it, as the debtor, but as kind of the holder, kind of owner of that property, with having that lender backing it. Ultimately, they can still foreclose on me, right, if I don't pay.
Yeah, so what that does is it's gonna give you the ability, what Gary Keller famously says, right, is we should call agreements disagreements. Because they're only really relevant when there's some reason to enforce them, or you're getting out of business somehow, right, that someone's defaulted. Otherwise, when's the last time you really sat and looked over the terms of an agreement when things are working out well? You guys all agree, right? I'm not like reviewing contracts closely when we're all crushing it and making money, right? I'm not literally focused on, what was that, my split on that thing again? It's when I'm gonna leave, how do we do so? What this is gonna do is gonna give you the legal right to foreclose on that property, so you can take it back. And there's gonna be a mechanism in place that's clearly gonna spell out to both parties on the front end.
Is how that's gonna work.
Yes.
And then the attorney's gonna draft that up.
Yep.
I mean, ultimately, just
And
go with an attorney, please do not try to just
You're gonna
write this up yourself.
You're gonna have your buyer pay for that.
Yep.
Right, that's part of their skin in the game, is they're paying for the money to draft that up, because your skin in the game is you're about to give your money up. You're not gonna pay money when you're sitting in that seat.
That's a big one, that's your kind of your safety net there. It's just your loans run out, repay back, and then that's gonna be their option to go ahead and foreclose on it and take it back, either force the sale, send it to auction, or just foreclose on you.
Yeah, and so I think the thing to keep in mind here, now we are taking this thing full circle all the way back to the beginning, right? Hey, if you're gonna be doing this, you should have some experience wholesaling or investing in a fix and flip or doing rehabilitations. Because if you don't have any of that experience, I'll give you an example. A friend of mine got in a jam and I gave him some money. Supposedly he was purchasing from a very close friend of his, very close friend of mine. He was gonna put together some vehicles. He had engines and he had vehicles, he's gonna put them together, no brainer. Well, I ended up owning 4 vehicles and a motorcycle at the end of this thing. Trying to give him a system to pay back money, it's whatever. Don't be impulsive when you're being generous. And I had no ability to put those back together, right? So there went all the profit margin. So in the instance where you need to take this thing back, if you've underwritten properly, you're gonna have that under there, but you still need the ability to complete the project, right? Either unload it and just walk away, so that you can pass this off to someone else, or the ability to finish the project and recoup your money that way, right? Hey, if worst things comes down, I'm gonna turn around, I'm gonna go hire this contractor that I know, get this property finished, and then I can offload this asset and get my money back. What are the risks?
Some of the risks, man. Well, certainly just them not paying. Look at it, borrowers can file bankruptcy, use tactics to be able to get out of that deal. And so that's certainly just something in your, having your attorney drafting that up, making sure that all of those exits are covered.
Would y'all say that Tennessee is an owner-friendly state or a tenant-friendly state? Yeah, it's a very owner-friendly state, and separately even from the laws, it's a lot of times it's the judicial disposition. In our market, the judges are very much disposed to not let tenants, I've seen people do it, I've watched people do it successfully, but it's been more rare where they're really running out the clock on people here. It's not incredibly difficult to foreclose here.
No, it's a
Or
very
evict.
common sense state.
Yeah.
You signed the paper, you gotta stick to it.
What happens if a buyer files bankruptcy?
So that's certainly where it can add up and eat up a lot of time, either just through, either just through the courts. Everything's just getting kind of tied up for months or maybe years, that property's just gonna be either sitting there and probably in some kind of state of disrepair.
Sure.
Started doing work on it, and then it's even more torn up than when it was bought in the first place.
This is a good reason to check credit. If you don't know how to check credit, we talked about the ability to view and review a credit report. Again, common sense, a couple things I always do. I ask for help, because when you ask for help from other people, they become more indebted to you. It's not why I do this, but I found asking for help, like people invest in you once they invest in you. Hence me buying all those cars and vehicles from my buddy that I helped many, many times, right? Because I was invested in them, and right, I must be invested because look at all I'm doing for Will. Will's always asking me for favors. I must really love this guy because I'm always doing favors for him. Will doesn't ask me for favors. Or, you know, so grab a lender, we'll happily walk you through that. Or, you know, you might wanna really look at it as a property manager. Property manager is gonna be more relevant here of, hey, do you have a second, I'm gonna take you to lunch, can you just walk me through how to look at a credit report and what you're looking for, what are the big red flags that you're seeing? You know, some things to keep in mind.
That is a really good takeaway.
Yeah.
I'm just making note, take my
All right.
and go out to lunch.
Typical private lending terms.
Yeah, so,
Will, what do you think of these?
I think it's pretty good.
Anything you see that jumps out, that's way off to you? Steve, how about you? Anything you see that's,
Sounds good.
okay, yeah, what are typical terms
pretty
for you?
straightforward, right? So, it's gonna be anywhere from, say, an 8 to 12%. Some private lenders out there, some kind of the bigger, almost like institutional ones, thinking like a Longhorn or Wildcat. I mean, I've gotten quoted upwards of like 14% at one point. So certainly around like a double digit is expected when you're going into this. You're gonna pay some kind of points or kind of funding fee, 1 to 3% on there. The 70% loan to after repair value is a pretty good metric or kind of rule of thumb, but again, that can swing maybe just depending on the property or kind of the different uses of it. So sometimes that might go upwards of like 80%. It's not gonna be any higher than that, but some might do like upwards of 80% on there. 6 to 12 month repayment term is pretty common across the board.
Yep.
I'd say again, depending on the project or how long something's gonna be held, it could be 12 months if it's a bigger project or something.
Are you guys seeing, just the purchase or the purchase plus any of the rehab costs and materials?
For private here, we've done purchase plus,
Purchase plus.
when we did a private deal with Steve,
Yeah.
and it was
So as long as
purchase.
it doesn't exceed 70% ARV?
Yeah, it just kind of depends on the deal or how much kind of skin in the game the buyers
There
put
there-
into
there really
it.
are no rules.
Yeah. So in that case, do you usually just set up a draw schedule for the materials?
Yeah,
Yeah,
yeah. And
Based
that-
on progress?
Right. So there's like either some prepayment up front, any kind of construction draws that are gonna be held into there.
no, I think that was good, yeah, so
That's
let's talk about, that's a good question.
And
Has anybody been involved in a new construction process? If you haven't, happy to walk through this. If you're doing a new construction, there's typically a draw schedule, right? So if you're a lender, you really don't wanna take this property back. Like lenders don't wanna foreclose on property, they don't wanna take property back, and they really would prefer you not to get so overextended that you can't just simply walk away. So typically, they're gonna put a draw schedule in place. If we're doing like so new construction, that would be something like, hey, we're gonna give you a certain amount of money, once you've got plans and everything, then we'll go ahead, we'll give you a certain amount of money to break ground and get to this stage. Once you're at this stage, we're gonna release the next tranche of money, and it's gonna be your responsibility to say, get the property framed and, right, dried in, we're doing another inspection, release those funds. Here, if you're dealing with private money, it might look something like, we're gonna release a certain amount of funds to help you acquire the property. You're gonna have some skin in the game, we're gonna give you the rest of that, and then as we go, we might be releasing funds. You know, I've seen it go both ways, where perhaps they're funding that renovation, almost like a HELOC, hey, you're going to them and they're funding it directly, or they're releasing to you in tranches. It's just gonna depend on the agreement and the relationship you have with the private money lender.
yeah, usually, I mean,
Great
I'm used to like having to just kind of even float some of those costs up front, get some work done, submit everything, and that gets reimbursed pretty quickly.
Sure.
It's gonna kind of vary depending on the structure of the deal.
What's a confessed judgment? Do you know this one? You seen this before?
Actually, that's
So confessed judgment, does it even really come up here in Tennessee? It's just a legal term. Again, we're talking about disagreement. What that means is in the event that this, when you negotiate this out, you can pre-negotiate just correct me if I'm wrong, a confessed judgment, which basically you're agreeing to it. It's almost the same as if you're agreeing to arbitrate. In this case, you're just agreeing to skip certain parts of the legal process. You're waiving those and you're agreeing to go right to a predetermined judgment, which will allow you to expedite getting the property back easier, right? Yeah. Personal guarantee. Do y'all ask for personal guarantees?
Again, I don't do it that much, but I mean,
Sure.
it's asset based for me.
Gotcha.
I do.
So, and what's the difference between a personal guarantee and?
I just ask for the personal guarantee because it makes somebody feel more on the hook.
Yeah.
The reality is the chance of me going after somebody personally would be highly unlikely.
Yep.
But it just puts somebody in a spot where they feel like they need to do what they agreed to do.
Yeah, so personal guarantee just meaning that if in the event of default and the event falls short, you're personally liable for this. You're not able to just wave this off, exactly.
Yeah, just kind of skip town on it all.
Cory, so let's run through some numbers. Okay,
Yeah, this
so
is kind of a sample deal. This is actually one that's pretty damn true to kind of what I'm working on right now, actually.
did you modify these numbers? It's just an example.
It's kind of like where it was, but honestly, it's really close. I mean, I'm happy
Okay.
to kind of like elaborate a little more for like what I'm at, but this is pretty damn accurate.
So we got an after repair value. What's the after repair value of this one?
So for this example, it's like 300. For me, it's like 300 to 325
Okay.
is kind of what I'm projecting on
So-
this. But 300 is my
We'll use
low
this one to
number.
keep it simple for
Yeah, yeah.
everyone who played at home, right? Purchase price,
$175,000.
and then how long is it gonna take to get this thing done?
6 months on average should be more than enough time to get in there, turn a property over, get it on the market, and sell it, and like completely say exit within sort of that 3 months. We're kind of planning on a 3 to 4 month window of rehab, and then a 2-month window to get the property on the market and sell.
To market the property there.
Yeah.
Are you building in some, what do you say, are you building in some additional time in your timeline right now? Or are you,
Right now, yeah. I mean,
Okay.
certainly depending on what, like where the property is, right? If we're in, say, here in Knoxville, inside the city limits, or even in my case, inside the city limits and in a historic overlay, there's just some added time that goes into that. I mean, like permitting, it was about like 2 weeks, but now we're 3 to 4 on average. I mean, I know for mine, it took me like all of a month to actually get my permits through. So that does have to get factored in, and yeah, kind of factor your time or shift your timelines accordingly.
so how much is the rehab gonna cost in this place?
50,000
Okay.
on this place. That's gonna be given to the borrower in draws as things progress. So they're looking at a maximum loan or takeout of 210,000, which is just 70% of that ARV, just to, or after repair value, just to kind of keep this plain and simple.
Yeah.
Yeah. Going to that loan cost, 12% interest. So the interest only is $2,100 a month, and then 2 points up front for that funding fee. Prepaid 2 months of interest up front, and 2 points is $8,400.
Mm-hmm.
Loan funded at closing, so the total there is gonna be $151,600 is what's funded. So when you factor out your total cost of your borrowing, 210 minus your 50,000 in rehab costs, and then your prepaids into there.
Yep. So the borrowers, in that case, the purchase price, remember, was 174,000, so the borrower's coming with about 23,000 and change to the closing. That's their skin in the game right up front, right?
Yeah. That's
Which
what
is-
we needed there. And this kind of broke down into our
Yep.
like cash flows, so you take that 175,000 purchase price minus the loan amount is 24K, plus your 4K in closing costs, so approximately 28 grand
Yep.
to actually take the deal down, and do it.
So how much cash, so they gotta have some cash up front, and then they're gonna go through a draw process, and you said we're gonna, they can borrow up to 210, how much cash are they gonna need to
Yeah,
close this thing?
So in this case, I mean, the total cash needed, in the end is gonna be about like 38.5, so that's the amount to,
35.8.
or 35.8,
Yeah,
excuse
yeah.
me.
I got you.
Yeah, 175,000 to buy it, 50K rehab, plus the 8,400 in closing costs and prepaids, another 8,400 in interest, the $4,000 in closing costs, you're looking at a total of 245.8 minus your total project cost of 210, it leaves you about $35,800 to take the deal down or to complete the deal.
Yeah.
Yep.
So you're gonna, at the end of this, right, you'll be in to this thing on paper for 245 with an exit for 300, but your out of pocket is only really 35.8 for your exit of 300, which is really allowing that deal.
Yeah, I mean, in this case, this really just shows the power of using OPM or just other people's money.
Yep.
In that case, being able to say, hey, like, your total costs are
Yeah, let's run
16.8.
through these numbers. So you've got your loan costs are 16.8, right? And that's gonna be your interest and your fees, right, Cory?
Yep.
And how much are you gonna make when you sell this? So what are you gonna walk away with?
Man, that's a pretty damn good spread, because you're looking at about 40 grand in profit on
Yeah.
the whole deal.
So they did
So
40
you-
grand in profit, so they're saying 300 minus 245 is 55, so that's including like your fees for like your actual cost of sale stuff.
Yeah.
If you're working with, there's gonna be an agent involved, closing costs, right, about 15K cost of sale, and you're still gonna walk with about $40,000.
Yeah, not bad. So I mean, in this case, right, they're increasing their return dramatically. So I don't know. I mean, pretty much kind of doubling your money at this point.
Yeah, so if we look at that, right, by using private money in this example and being established enough to do so, you're making a significant amount more money than you would by having like a 50-50 partner. Right, so that's one of those things as you climb that ladder, right, where you can go ahead and use some private money, and your lender's getting an annualized rate of 16%, which is one of the things we're talking about today is, right, we've been talking about this from the consumer side. What's the advantage if you're on the lending side? Well, because you get a return on your money is 16%. How much is the stock market down now? Anybody follow? Anybody have any in stocks? What are we down so far? The last month?
The last 2 days, they ran it back like 1,500 points. See if that holds, but yeah, it's down quite a bit.
Yeah. That's the thing I was thinking about today. I was talking to an elderly couple. They're gonna invest with their son. I know their son. He's an incredibly successful agent in Nashville. They're gonna be plus it's their son. They're gonna be just fine, right? You can just make them whole. She's like, oh, it's so risky. I've never done anything like that before.
Yeah.
And I was like, that's such a fascinating perspective when half of your portfolio evaporated in 2008. Overnight, 50% of your pension, your stock fund was just gone because they gamed the system to sabotage, right, all these pension funds because they created fake A-rated securities. They fixed every loan rate out there, every interest rate's been manipulated in some way, and now the stock market's going down. So but it's interesting. You think this is risky?
That's the risky.
That's just a perception thing. I didn't tell him all this. He's a very gentle man, but I thought it was fascinating. Like, you still feel like that's safer when I don't think that's safer. You know, I think it's a good thing. I don't think the market is necessarily safer than.
No, not in that case. I mean, that's why real estate's always just been a solid asset class to invest in overall.
Yeah, man. What's next here?
Yeah. So here's some things to consider just as the borrower, right? What should your borrower provide when they're going into it? So at least some kind of equity or skin in the game. Never ever lend 100% of the deal. Ever. I can't imagine why you would ever. I know there's a few lenders out there that kind of advertise that, yet that can't be.
They don't,
Like
they
it's
just
not
steal
real.
money.
Right?
So what they'll do is they'll advertise 100% and they'll get people that don't have money, real money. But send me $1,500 so we can lock in your rate, and your money disappears in Zimbabwe somewhere. I've come across so many of those.
Really?
Yeah. If it's something that sounds too good to be true.
Yeah.
Yeah, 4%
usually is.
interest when the banks are charging 6%.
Right. Yeah.
7.5.
Yeah, never lend all of your money, and you're gonna need some sort of proof of funds. And this is something where you really wanna do your due diligence. I've seen this get more, on the real estate side, I don't know about y'all, I've seen this get more sophisticated, some of the scams people are running with proof of funds. So you might wanna to do a little bit of verification to verify that.
Oh, yeah.
You ever call an institution to verify proof of funds? Or do you get?
Yes.
Do
I wouldn't just take a screenshot of someone's, I'll put it that way. Right, there are other ways to provide proof of funds, like at least a letter from an institution or something.
And even that, I think it'd be best to call, because I've certainly seen plenty of letters get fudged
Yeah, I would
and
agree.
forged and just manipulated.
But if they've got a banker, if you have a
Yeah.
private banker, that's who you could go, and they have whatever institution they're lending with, will have some banker they can go sit in on an appointment with, and you can call and verify those funds pretty simply.
I can give you a problem with that.
Yeah, please.
I have clients or prospective clients ask me for a POF all the time.
Yeah.
And sometimes out of laziness, I'll just write them one. Because at the end of the day, they're not gonna close if they don't have the money.
Yeah.
So it doesn't necessarily mean that it's really a valid proof of funds. I mean, it's usually with somebody I already know or I've done business with and I've already done the document collection with, but once in a while, just pure laziness, I'm on the run and I'm in the car and I'm like, Tamara, do me a favor, send them a POF.
And I think that's probably analogous to, like, we all know real estate contracts are binding, but they're really only binding to the extent to which you're willing to enforce them. Like, if you're not willing to sue about this, it's kind of enforceable. It's quasi-enforceable. There's not a lot you can do at the end of the day other than just walk from the deal. It's the same thing here.
Yeah.
So you might want a credit application outlining the deal, and the loan side, possibly signed release for credit report and application fee. Our Grid, the mothership is located in Virginia, and Virginia and Maryland have very different laws in Tennessee. Here in Tennessee, you do not, the court system is so much on your side, I think it's a lot easier to operate here.
100%.
Yeah.
Compared to out there.
All right, so what should the borrower provide, Cory?
Just a fully executed contract, right? Proof the deal's actually going down. Full underwriting, at least in terms of like, here's what my estimated, construction costs are going into there, from somebody who's licensed insured contractor, not just necessarily their own underwriting. They've gotten some other quotes from some professionals that are hopefully gonna be the ones doing that work in general, so they backed it all up. And then just proof of insurance at closing, at settlement, so that everything's covered right then and there. That you're not taking on something or lending money out on a property that's not insured.
Do you verify insurance is in place?
Yes.
Yeah. Of all the things, that's one I was like, I
that's a
wouldn't.
big one.
You might be like,
That's a
if
big
you don't
one,
have the
though.
money, it's not gonna close, but you absolutely wanna make sure
100%.
insurance is in place. Whatever can go wrong, will go wrong.
And we get notified if insurance is canceled.
Yeah, because you're added on the declaration page, right?
Additional pay.
As a payee.
Are you guys looking for special insurance, not just regular
It's
homeowners insurance?
It's generally builder's risk.
Yeah, so you want a builder's risk policy in there. If you've got questions about that, let us know. You should be added as a payee. And there's some insurance companies here. If you don't know what to do, my first advice, I know some local builders. I'd ask them who they use, and that'd be who I'd go talk to, right? And get with someone who specializes in that. They're gonna guide you through what the appropriate amount of coverage is here, because you wanna make sure you're adequately insured, and especially in this market, right, that we're adequately insured for actually replacement costs.
Yeah.
Right, like what's our rebuilding cost, because there could be a big gap between what a renovation is and what it's gonna cost to rebuild in this inflated environment. You wanna make sure you've got enough money if, God forbid, the house burns down, where you can be made whole.
At least made whole. I'm a big fan of just like almost over insuring.
We did one, Cory, I forgot about this one, were you involved with this one, where somebody came out, the builder came out, and they loaded, it was like an old historic home, they were redoing the roof, and they just like put the pallet of shingles on the roof and like basically collapsed the whole structure, it couldn't bear the weight, and so the whole structure ended up being collapsed. It was like the house got totaled. So they got a free house, worked out amazing for him, because the roof.
Unbelievable.
So yes, whatever can go wrong will go wrong. Please, make sure you're adequately insured.
Get your insurance, make sure that you're
Mhm.
covered, even like over covered at that point. I'm a big fan of insurance. Honestly, I'd rather be like over insured than not at this point in the game.
Gotcha.
Yeah.
What's next?
That's pretty much it. I mean, that's kind of the gist of it, really.
All right, so
Kind of quick ones, we can do kind of some Q&A.
I know. Let's get.
Really around this topic.
Before we bring Steve up there, is there any questions you have about the process, about anything that came up, anything you want to know more about? All right, let's jump right to the meat. Steve, you wanna join us up here?
See if Will wants to come up. Will's really cute.
Will,
You want to jump up? Will, grab your chair.
talk about doing some project
Yeah.
planning. There you are, sir. No, I can add a whole lot to. That's okay. That's okay.
We can lend some insight into there, just from some of the different deals that you've done.
I've got a couple questions, and I think this is interesting, because you shared a lot of things, Steve. People have heard from you before, but give us just a quick, 90-second sketch of what your background is, because you gave us, I love your perspective and some of your advantages. You have a different perspective than other lenders I've seen in the market. And also, I think your background will say, okay, here's where I relate to Steve, and I don't have that experience, maybe I should, if I'm doing this, I should adjust accordingly.
So my background really has nothing to do with lending or anything of the sort in real estate. I've had a number of different businesses. I've always been entrepreneurial. I shouldn't say always. I mean, as a kid, I had, jobs like everybody else. I don't really like working for other people, which I would assume is the basis of what makes up this room and every other room that looks like this, right? Everybody's dream is to work for themselves. I was a financial advisor for a few years in my late 20s. I was in investment banking for a while. And then my last business was a large call center. And I did that for about 8 years in insurance, and we ran about 100 people, and My partner bought me out a couple of years ago. I chose to move to Knoxville and then transition full-time into this, where this had been kind of just a hobby for me. I would do a loan here or there kind of thing, and I just realized for the first time in my life, I actually do something that I enjoy doing. Like, I get up every day excited about this business. My wife will tell you, she just can't get enough of me talking about it. but what's so great about
should talk.
But what's so great about it is you can go in one direction in this business. Like, my goal was strictly to lend our money and kind of chill. And the truth is, that's the least of what I do now. I do tons of all kinds of creative financing deals. I do lend some of our money now. I buy a ton of property, like over the last 4 to 6 months. I partnered with somebody here that I met at a meeting that I started at my house, and he owns a construction company. We bought, I think we're gonna be buying our 12th property in the last 4 months, like for rentals, and we have a couple of flips. I got caught in every kind of craziness there is in this business, and it's so exciting, and it's so game changing, and it's so open and available to everybody that's kind of what brought me to this point. I know that wasn't the question.
We moved to Knoxville to relax, by the way. Just FYI.
And so the funny thing is when I was pitching this, I said, well, hey, this is a way to transform your active income into passive income. And Steve started out with passive income and caught the bug, and now you're fully involved as an active
I'm a
investor.
different breed though, man. Like,
I love it.
and this is what does it for me.
Yeah.
I enjoy the game. I love it.
Yeah.
So.
What's your background, Will?
I've not done a lot, but what my involvement would, I come from the investment fund world, I guess, as a fund manager, and me and a guy got together one time and put together a little investment pool. It wasn't much. I mean, we raised about $1 million, and what we did, our take on it is we were doing basically private loans, but we were doing it for the origination fee and then turn around and selling it like about every 12 to 14 days, something like that. So we would sell the note off. So we'd get the origination fee, generate the cash flow off of that, so we would turn that $1 million at least twice a month and generate the origination fees, and that would pay our investors and pay a profit.
So then this is, I'm glad you brought this up, because I think this is a fascinating one, right? If you really want to take the next level, do you agree, Cory, from going from active to passive is getting to what you're doing, which is just selling notes, or be the purchase buying notes where you're really removed from rent, you're just a note holder at that
Or
point.
be the guys that invest with him and do
Yes.
the fund.
Yeah.
Yep, exactly.
Then you're really passive.
Yeah, so I love that. Cory, what questions do you have for these guys about private money?
Man, initially, I guess, kind of just going back of just what got you into it, or where did you kind of come across it? Like, where did that concept come up? Because I think a lot of us certainly don't grow up around talks of, wealth building and lending and just all that. So
Not in
like,
my world, no.
Right. I mean, I
I
think
promise
a
you.
vast majority of us grow up not ever hearing that. So, like, I'm curious, at what point in life did that actually, did that spark, or who put that bug in your brain?
We held a note on our own house at one point back in Florida to sell it.
Mm-hmm.
And, it was a reasonable rate at the time. It was higher than, normal market rate, because it was prior to Dodd-Frank, and I'm not gonna get into the Dodd-Frank
Sure.
discussion. I just wish somebody burned that paperwork. But, it's a lot of paperwork to burn.
Yeah.
And, I turn around to my wife and I'm like, look what we collect every month for doing this. Wouldn't it be nice to do this on a grander scale? And then over the years, we did a little more, and in my other business, I made more money, and I was able to save more money and have more money to do it with. I mean, it's very difficult to do if you don't have money. Like, becoming a broker in this business, it's not a phenomenal scenario. Like, I broker deals because I do it to keep relationships. You're not going to become ultimately wealthy brokering private money deals. It's a couple of grand here, a couple of grand there kind of thing. You'd do better being a realtor for sure.
Mm-hmm.
I got introduced to a guy from California, and mainly I've been on the equity side of the deals, and he started talking about the debt side, and it intrigued me, and so it's California, but
Yeah. What if somebody was, I guess, starting out, or if they're looking to kind of learn, like, is there a maybe recommended amount of capital that if you're gonna start lending out money that you'd want to either have to start off with, right? Because we're talking about, say, an example of a property here that's 300 grand, and you're showing out 210, I mean, depending, I guess, on what area of the country you're in, the property's gonna be a lot cheaper or more expensive, but like what capital base would you advise somebody have before they even start wanting to go out and kind of lend it like that?
So that's a great question and really timely. So I have a client of mine that I've lent to twice, and he came back to me a third time. And at the same time, I've been talking to this woman, Lindsay, who's wanting to lend her money. And she explained to me how she lent her money once. And I explained to her that she's to never lend her money again that way. Like she did everything we went over, done entirely wrong. Thank God she still has her money. But she has about 100 grand. And this guy, Shane, his loan was about 100 grand. It's a low price purchase and a very high rehab. And I said to her, I said, Lindsay, if you want, I'll hold your hand and you could do this deal. I didn't really care. I'm using more of my funds for other stuff. And to be honest, I always have an angle anyway. My wife gets the sale of the property, so, you know, we'll make a few bucks anyway. But I introduced her to my attorney, took her by the hand, walked her through everything. And she wound up lending, and actually out of her IRA. She has a self-directed IRA. I have somebody else that needs to learn that also, so that's a discussion for us too. But, so $100,000, she'll make herself, if she can keep that moving, she could make somewhere between 13 and 16% annually on that. And there are ways to get much more creative to make more. You know, you can make 20, 25% on that money, quote unquote, lending it if you wanna really learn how to do it. So I think 100 grand is a fair amount of money to work with where you can make it 10. Less than that would be very difficult.
So I've got a couple questions from Erica Ricketts, who's, one of our lenders. She had a couple questions. When you talked about Will, about that LLC, was that they were making a capital contribution to the LLC and you were lending the money directly out of the LLC? Is that how you had structured it?
Yeah, I mean, so it was an actual fund. So I mean, yes, the fund is an LLC, but we were the managers of the fund. It's a separate LLC. Like I said, fund structure. I get into
So
that.
that's a very good. Is that like required securities license to structure a fund?
No, everything was a Reg D. So I mean, you do a Regulation D. You could do a 506B or C, whichever depends on if you want to market or not. If you've got, going back to the last question, if you've got, talking about minimum, whatever you have, I would try to get 2 to 3, 4, 5 other people to triple that number to be able to scale. Because if you do 200 grand, do you 1 or 2? Every 6 to 12 months you do 1 to 2 deals a year. If you do 600, you do 3 to 6. You got a little bit of scalability in there, but you don't have to be licensed or anything to do that. You do have to file a Regulation D, which is just a notice of filing. It's not super hard.
Gotcha. And then the other question they asked is, when you do this in closing, are you providing some form of settlement statement?
The title company provides the HUD.
Yeah. So just the title company's providing a HUD. You're not, because you don't have any disclosure requirements. It's just a private transaction, and the title company is the one.
Correct.
Yeah. Totally agree. Anybody have any questions in the audience? Duke.
Steve,
Duke, how are you?
when you talk about starting up lending, et cetera, it better be 100 grand as you plan on losing, right? I mean, in other words, if you lose it, it's not gonna kill you. You gotta look at it that way, right?
I don't, see, to me,
How did you look at it?
So every deal that I walk into, I actually really like that question. I never walk into any deal that I do, whether it's a purchase or a loan, with how much am I gonna make doing this? That's not my thought process. I look in every deal as to what is my worst case scenario. And if my worst case scenario in my mind involves me losing money, I don't do it. So I don't think there is a bad case scenario in lending the way we lend. I think, like I said before, the way banks lend, they lend into a losing scenario all the time because you have some appraised value on a property that's already beyond overpriced, and they lend 96.5 or 97% of it to somebody who has no ability to sustain it and no understanding of real estate. They just know they really want a nice house with a pool for their family. In this game, somebody's putting down 20%, they're already buying a wreck under market that hopefully a wholesaler didn't overcharge them for and, puff 40 grand in there that should have been 10, and that they didn't buy right. But I'll look at that and I know how to judge a property and I won't lend on it if they did. So I view it as, I know it sounds silly, but as close to riskless as you can get. I mean, if the government decides to change the way they run currency and they knock us all to zero and they take away the US dollar, so be it, then we're all done. But short of that, I view it as absolutely riskless. Yes, sir.
Is it fair to ask you what bills to make it, or what describes it as riskless? Is that fair to ask?
Sure.
I'm asking.
Yeah, so you're gonna, so you're the borrower, you're gonna put down 20% to start out. I'm going to make sure that the property is, that you're purchasing, that I'm lending on, is already what I consider undervalued. For sure undervalued. I don't have a specific percentage, I'm not forced to because I don't have to work for a fund, I work for myself. But I make sure that it's undervalued, I make sure that you have a clue how to do a rehab budget. I'll do either a walkthrough with you virtually, or I'll go see the house if it's close by and I'm not feeling lazy, and we'll go look at it. And then I'll have my wife run comps on the AR, so that we know if there's a real ARV. And then I do a large deduction in my head of what that ARV is, just in case times change or we're wrong. And if after that large deduction, I'm still good, regardless of your 20%, we're good to go. Because I don't have to get back your 20%. I just have to get back what I lent.
You look at it from the standpoint of what the customer's gonna make too, so that so it's return business?
You ask great questions. No, you really do. So I've probably turned down 80% more loans than I've done for exactly that reason. I look out for everybody that I work with. I know it sounds like I'm taking care of myself, but that's not how I work at all. So it's all about return business, and not even so much return, people being able to last in the business. Because so many people work on either limited funds or no funds at all, or they have these dreams, they listen to too many gurus that tell them they can do this with no money. It's a lie, as you can see from the numbers. So if you're gonna do a $250,000 all-in project and you can't show me that there's at least $60,000 to make, after all costs associated, I tell you not to do the deal. Because if you think it's gonna be 60, it's probably gonna be 40. If it's 40, I think that's livable, it's worth you torturing yourself for the next 3 to 6 months. If you think it's gonna be 35 or 40, it's gonna be 18 to 20 or 25, I will absolutely tell you we're not doing the deal, at least you're not doing it with me. So yes, 100%.
If I'm getting started and I'm Lindsay, right? So the likelihood, maybe I have a Steve in my life, more than likely I don't have like just a private money
That was a
guy.
weird connection too,
Yeah.
like she got introduced to me, we got in a conversation, it was just a strange
Sure.
type of thing, you talk to enough people. kind
Yeah,
of thing.
and that's why I love being in these kind of rooms, because you get those kind of relationships, because this is not unusual, right? Jason
Yeah.
will go take you around,
That's
Jason
right.
Daniel, take you around driving, teach you how to drive for dollars, but would you recommend like finding someone like Will and investing, like distributing the risk? Hey, can I go into a fund or something, or can I collaborate or pool some of that to mitigate risk, or is that, would you just do it on your own?
So I don't know how to answer that. So for myself, I don't invest in limited liability partnerships. I don't do anything that I don't control. Like I now have my ex-partner who bought me out of my last business. He's selling the building from our old business. Like he's committing $2 million to me to work with now as well as my own money. So I'd rather raise money and I'd rather run the money.
Yep.
And I'd rather have partnerships and work that way. It's not that I'm a control freak. I'm very big on delegating. I'm just not big on having zero level control. I need relationships. I've been in business for 30 years doing different things. I have to be comfortable with people. I can't just throw money at a fund. Like there are oftentimes, you guys probably all see limited liability partnerships for large multi-family units. You know, minimum buy-in 100,000.
Fractional ownership,
Yeah,
right? That's the
fractional.
new, Grant Cardone is trying to pitch everyone in the country.
And I gotta be honest with you, over my dead body would I do deals like that. But that's me. That doesn't mean other people don't disperse their money and make money. I'll take the pass on the opportunity. I can't have zero level control with a board of directors who I know none of personally. Now I get to know somebody, would I give them a shot and invest money? 100%.
Gotcha. But that's also, it sounds like, are you heavily in, the conversation we had about the stock market, about the other thing, if you're heavily invested in those markets, it's not dissimilar to being invested in something
I
like.
don't have a nickel in the market.
Sure, but if you're looking at those asset classes, it probably is not that dissimilar to participate
Totally.
in a syndication, or it's gonna make sense for you because that's already part of your risk portfolio, and that's how you're probably looking at it. Cause I think you've done some funds, now are those all personal relationships, or are you actually just raising capital from
So, some are personal, but yeah, some of them, I mean, we just do, capital raising, 506Cs, just blasting it out, anybody and everybody wants to come in, and so, what you see people at different levels. Some people starting out may want to come in passively so they can learn, because they may not have $200,000 or $300,000 yet, and then on the other side, you may have some high income earners that they're really good at making money, but they don't really have the time to go out and be active as a GP, to be active in finding the deals, putting the deals together, structuring it, stuff like that. So they'll come in passively. And so it really just depends on, each individual's situation. I mean, it's really there's a place for everything, in my opinion, and it just depends on what works best for where that individual's at that time.
When you had that fund you were talking about of $1 million, was that only like 5 people involved in that with all those personal relationships, or that just like?
Yeah, no, that one, like I said, that was a little smaller deal.
Yep.
I mean, that was, so that was more just make some phone calls, put some stuff together and tried it out. I mean, we didn't do it very long, because it's a lot of work. I mean, it really is. Compared to some of the other stuff we do, it's a lot of work because you gotta be sourcing the deals. You gotta be, getting the loans originated and then turn around trying to sell them. So I mean, there's work involved in it.
Did you just find that for the work involved and all that? So last question with this, the opportunity cost was, man, for what I have to do to originate notes and flip notes, I could be doing like syndicating an apartment or something, or putting together, it's the same amount of maybe time and involvement, but getting more of an ROI or doing something that's maybe more sustainable. I'm not starting at zero all the time.
I mean, there was good money in it. It's just, we were focused on some other things too. So it was kind of one of them deals where we tried it and, it was okay, but it wasn't something that we wanted to continue. So we just kind of divested and went on our own ways.
Yeah, good. I think those are good questions. And that's just.
So we were talking about downside. Have you guys ever had to foreclose? How often does that happen? And walk us through what that looked like if you had to.
I foreclosed once. It was amazing. No, it's nothing I ever wanted to do or ever set out to do, and it wasn't for the typical reason you would think. So I had funded an RV park in Bristol, Tennessee, right outside the raceway. It was like going back and forth all over Facebook for weeks. So I'd gotten that done with 2 partners. I became friendly with one partner, or so I thought. The other partner had his name on everything. The partner I became friendly with did not have his name on anything. I had lent $300,000 on the property. Property easily, even not producing, had to be worth $500 to $600, $700 at the time, just by way of, potential, right? They made payments for the first 9 months, and then the partner who had his name on everything decided to screw over the other partner. Just essentially told them, I'm keeping everything, you're getting nothing, like that kind of deal. My name's on everything. They were friends for 15 years, just turned on him. In the midst of doing that, had a heart attack and died. Interesting karma. The other partner, I won't get into that, wasn't the greatest guy either, but I tried to help the situation. I tried to get the guy who died, I called his family like 1,000 times and tried to talk to them and explain, without the guy who died as the guarantor, I'm gonna call the loan. I want you guys to work it out, because the guy, at least that I was talking to, was the one running everything. I didn't trust anybody else to run it. He was at least involved. They would not return my calls. They would not speak with my attorney. Their attorney would not speak with my attorney. So I finally went to my attorney and I said, let's do what we have to do. So just so everybody understands, when you foreclose, you don't take a property. You don't just get to go take it. Like, so if you lend somebody $300,000 and a property's worth $1 million, you don't just take the property and go, I just made a $700,000 profit. Except sometimes you do. So what happens is you have to file. There's a bunch of paperwork that gets filed, and then you have to file a 2-week notice of what they call auction for sale. Okay, just stretching. So you file a notice of sale. So my attorney said, do you want a lot of people to see this notice, or would you rather have the shot of taking it? I said, I'd rather nobody see it. So he filed what he had to. We were traveling. The morning that it went to auction, Matt calls me up, the attorney, and he goes, Steve, there's not another soul here. He goes, we're 5 minutes from closing this auction. It's gonna be yours. And I was like, holy crap. So I took over so the property came back to me. What would have happened is I had I had a note for 300,000, just so people could follow the game. If somebody else would have come in and, let's say, bid and bought it for 500,000, I would have gotten my 300 that was owed to me, plus I had like 2 or 3 months of back note due to me, which is like another 8 or 9 grand, and I would have gotten like another $15,000 for penalty nonsense, and my attorney would have gotten paid. Nobody else showed up. I took the property for 300,000. I resold it for 575. About what, 2 weeks later? 575.
Second contract we had one time.
Yeah, well, I wasn't gonna bore him with that one, but one fell out, but I resold it for 575. Guy gave me 125 down, and I hold the owner financing on the additional 450. And kid's great, he blew the place up, he's killing it, it's probably worth $1 million to him at this point. But that was the only time I've ever been in a position even close to having to take something. I know it's a long story, sorry.
No, it's
For those who are
Great
sleeping,
story,
I'm
yeah,
sorry.
great story.
it's win-win deals though, right?
Yeah.
Because the story you just told is you walked away, you made this great return, 275, but you also, this kid's got a property worth $1 million. You left enough meat on the bone where
Always.
someone else can come in and prosper too.
And that's my
Yeah.
belief system. That, again, and that's what my problem with wholesaling is. If wholesalers would be conscientious of that, they could do so much more business instead of trying to make a $35,000 lick on an $80,000 property. Take the 10 grand, you could sell me 10 properties in the next 3 months. You take the 30 grand, now you're on the market and you gotta fight for the 3 guys that actually have money to close.
Was it hard, Will, finding people to give the money to? Because you had to actually go out and hunt, try to create these opportunities, right?
Well, kinda, I mean, we had some people that were brokers that would, send them to us and stuff, and so they did a lot of the preliminary,
Good.
weeding, I guess. But yeah, even still after that, like I said, that's what I'm saying, we still had to have like basically a full team that would, between, verifying everything, making sure documents were squared away, everything we need, because basically when you're selling these notes or selling them, whoever you're selling them to they have a certain set of, requirements that they need, they want, and so you're kind of playing matchmaker almost,
So since you're basically almost doing what a mortgage lending essentially.
Yeah.
Secondary market, I'm generating these, I'm selling them to there, there's some sort of underwriting guidelines I have to follow.
That's it.
And it's just like real estate or investing, it's a sales and marketing business.
Turn and burn, yeah.
It's a sales and marketing business that the product now is notes instead of houses or mortgages.
Like, it would be very difficult for me to sell most of my notes because my due diligence is goofy compared to what most lenders want. I know because I do enough broker deals and I wind up taking over a lot of deals and funding them myself because I get frustrated with the way they do business. They think they're banks and they're not. People are coming to the street for money because they can't go to a bank. I have a deal now where they're bothering a guy because he had a DUI 10 years ago. It's the 4th deal I'm funding with him through an institution, but you guys need to understand, if anybody's gonna be an investor here, times are changing, the money is getting tighter and tighter, they don't wanna lend it. Like, they're looking for excuses not to lend the money. Like, you're not getting any deal done without 20% down, there's none of this 10% down, there's none of this, well, the owner of the property is willing to provide, a 20% holdback, so I'm gonna get in the game for free. That game is over. None of the lenders will allow it. You're not going to get gap funding. Does anybody know what gap funding is?
What is,
So the 20% down that you have to come to the table with, there are gap funders out there. I've done deals like that with people too, where I have partnerships with them if I do it, where you can go get that 20% if you don't have it. So like a deal, let's just say you're gonna buy a house for $100,000 to rehab. You have to come to the table, if you're coming to me or a hard money lender, you need to have that 20 grand. Well, what if you don't have that 20 grand? There's another way. You go to a gap funder, they charge you 9,000,000% interest because they don't have first lien. They would take a second position lien. If I'm going too deep, I could stop, but keep going?
No, it's good.
Okay.
Keep going.
So they could take a second position lien. None of the first position lenders are allowing second position liens at all anymore. So I'm gonna go back to this again. If you don't have the 20% down and the closing costs, you're not buying property. Unless you find a seller legitimately willing to offer you true owner financing, where they just say to you, I just like you and I trust you and you can pay me the $600 a month and the $3,000 down, and they shake your hand and they're willing to do it. But if you don't find that and you don't have the money, you need a partner.
hey, the reason the first mortgage person is not allowing the gap funding or the second mortgage, I guess, because then they know that they've got a weak customer anyway. And so they're not gonna fund first mortgage to somebody that weak can't come to the table with the down payment.
They want the
Is that
skin in the
it?
game. They want your skin in the game.
Sure.
And I don't really argue.
Now, I've got a three-part question unless someone else has a question.
Anybody wanna save me?
All right, Steve, all the time, you always wanna be able to jump in the middle of the thing if you smell a rat, right?
Mhm.
Just like that, right? In other words, never be in a position as a lender where you're held back from getting in the situation, you see that the thing could go south, or you smell a rat or something, right?
I'm not sure I'm following yet.
Words are just like I said, smell a rat means, in other words, if you see something sketchy, if you see something questionable, if you see.
You mean before I
Are
get
you
involved?
asking about the ability to call the loan at any time, Duke?
Just about, yeah,
Okay.
I've never called a loan early.
but you're a careful operator, would you not agree?
I could be more careful, truthfully. I'm not super careful. I try to give people enough rope to, to do what they have to
You're
do.
actually highly relational.
Yeah.
Yeah.
Yeah,
If
my,
you do enough homework though,
Yes.
so you don't have to be careful from then on.
yeah, pretty much. I mean, I think you said it best. I build relationships. That's my whole business. I would feel like if somebody got themselves in a bind that I was lending to, and I've had it happen, they'll pick up the phone and call me and say, Steve, look, I'm having a problem right now. And we would have a conversation. My goal isn't to take anybody's property.
And I think you're relational, but coming from an institutional world, is it a little more analytical of like, hey, it's
Yeah.
black and white.
It's all numbers, yeah.
Here, it's just a numbers, here's, you're gonna invest in our fund and here's the guaranteed return, right? And that's maybe the difference of approaches. You're gonna have access to some different vehicles,
Mhm.
right? Some more passive vehicles, say I can just come in with Will and we'll bring him back here to talk about investing in apartments or something or in a fund. Hey, I can give this guy, which is not different than what you're doing in the equity world, right?
Mhm.
I can give this guy my money, he's gonna help manage my money, and that's what I'm paying him for, right? And then here's another approach of, I think Steve is a very analytical guy, which I think we actually, all three of us relate a lot there, who's very highly relational. Like, the wheels in here are super analytical, the way you're interacting with the world is 100%. It's relational, because the relationships will take you much, much farther than the numbers. Right, relationships, and I think that's why we're all here. Would you agree? I know, Vinny, you've been doing this a long time, right? It's really like relationships open those doors that money can't open for you.
100%.
Right? That's what actually gets it done. That's what you bump to the front of the line. Awesome. It is 7:24. Thank you, Will Morris. Thank you, Steve Levine, for joining us. We appreciate you guys. Corey,
Yep.
take us out, man. What do you need them to do?
Yeah, a couple things, right? So certainly invite your friends, invite people you think would find value in this. I trust you guys got some value out of this diet. You can certainly find all of our information there at gridknoxville.com. Make sure to go on there, make sure to leave us a nice review. Make sure to go on there, register for next month's meeting. Next month, we're actually gonna be diving into just how to buy apartments and how to invest in apartments and scale.
We've got a surprise guest named Will Morris. He'll be joining
He's
us.
gonna be joining us.
Right, great topic. Also, interestingly, Wednesday, October 12th, if anyone is interested, there is a informational session about advanced Knox. Had a great conversation with the city council and the mayor, Young Professionals Network did. They are revamping the zoning for Knox County. They are looking for input. I think it'd be fantastic for some investors to actually have some input. What they're all actively talking about, which I think is really interesting, given the politics of our area, is everyone's on board. We need to increase density. They want to build like a East Town Center, like they have the North Shore Town Center out there. And so they're looking for some input in there to how do we create more like multifamily? How do we get some condo development going? Which I think it'll be in our interest. If you're interested, let us know. But they are actively looking for input because essentially at this point, it's like no one's involved. It's some builders and like retired agents are the only people that show up to this stuff.
When is that?
That is going to be Wednesday, October 12th. Young Professionals Network of Knoxville and the Chamber are hosting an input session. I can get you all that info. We'll send it out in our
Yeah, we'll send that out
newsletter.
within the next week, because we'll send this recording out, and
Yeah,
everything, so we'll make sure we
so
include that
we'll make
as
sure
well.
you get that, but just keep that in mind. I've had some great conversations with other investors. I think it's something where we have an opportunity right now to direct our future because they're making some big decisions about infrastructure. And for example, last thing I'll leave you with is we had a great listing in Seymour, right on 411. The only thing we could sell it for was commercial. It really should have been a great multifamily parcel, but there was no sewer. There's no sewer running from Sevier County to build this thing, from Sevierville to build this thing out, and that's that's gonna hold us all back if we don't plan correctly.
As a side note, I've heard that Farragut's working the opposite direction. They're fighting multifamily and high
Yeah.
density big time.
Big time.
Oh, yeah.
Are you
Well,
guys
they
seeing
have
that as
that new
well?
one
Oh, yeah.
going up right
Yeah.
across the
Yeah.
broker there.
Well,
Yeah.
Hardin Valley but what's fascinating is Mayor Jacobs is talking about the problems with Hardin Valley. And that's what I mean, if we're at a place where, right, our Republican mayor, Republican council is all talking about the problems with having just like, we're big private property advocates. They all just see the writing on the wall, which is we don't have the infrastructure, we can't allow the rest of the county to go the same way Hardin Valley did, because it'll be totally unsustainable.
You can't move.
Yeah.
What are the problems with part of that?
Just we can wrap this thing up. From my perspective, you've got a choke point, right? You've only got a couple roads that go into this. You've got no retail, like no central planning. So if you're out there in Hardin Valley, you've got no ability to get to any sort of retail or commercial, and it's just a sprawl of single family subdivisions.
Everywhere.
Which is all choke point by that school.
Yeah, they got
It's
the
just
three,
not very
they got the
smart.
three
There's no
schools
room
all
to-
right in a row, that traffic is terrible,
Yeah.
terrible.
And I thought that was very interesting because it's something we've thought, but this is, these are very growth oriented, like, this isn't like community groups saying this, which has been the case before. This is, like, our leaders are all on the same page, like, is that dire? The other thing I said was, we should be paving 200 miles of roads every year, we're only paving 70 miles of road a year. So if you see a road paved, they're like, show one of your kids, because the next time it's gonna be repaved right now is 92 years from now. So, long story short, get involved locally.
Wow.
Like, come have your voice heard. And the same thing the city councilman said is like, call me up, get my cell phone, reach out to us. Like, if we have a relationship and you bring me something, like, I will read your email. Like, I will bring it up. They're pretty accessible. I thought that was pretty interesting to say. Yeah, we've got a pretty networked community where people are not that far from you. And you probably have someone in common with them. Yeah.
That's cool.
All right,
Thanks, guys.
You want to network?
Appreciate you a lot.
Thank you.
Yeah, thank you very much.
Thank you.
Thank you again.